All right, Chris, it's Friday. It's on the markets. As always, it's great to be back with you to talk about the markets and the economy. Dude, this is funny, this meme, right? So I reached out to my buddy in New Jersey this morning, actually. I was coming back from the gym. I'm like, hey, man, what's up with all the UFO stuff going on in New Jersey? Like, is this real? Like, people like legit seeing these things? And he's like, well, they're not around my house, but everyone's saying they're actually seeing them. And there's literally drones flying around and the government going, we don't know who they are and what they're doing. Somebody's got to know.
Things are getting so weird. I was talking to somebody about it today, and they're like, I hope it's UFOs, because if it's the U.S. government testing something over their own citizens, that's wrong. If it's the U.S. government letting a foreign government in, that's wrong. If the government really doesn't know what it is, that's wrong unless it's a UFO. And I'm like, where are we that we're hoping that it's aliens? What a weird time. And that this is kind of how I feel about it. He's like, he was asking me, how do you feel about the drones over New Jersey thing? I'm like, honestly, I haven't even been following it. Like, I don't have the emotional capacity for anything else at this point. It's just, there's too many weird things happening. I can't take it anymore.
I told my buddy, I'm like, well, here's how I look at it. Because the Pentagon saying like, yeah, we don't know. And I'm like, if the Pentagon really doesn't know what these UFOs are flying over New Jersey, like, I don't know what's scarier, the fact that there's UFOs flying over New Jersey or the fact that the Pentagon doesn't know what's flying over New Jersey.
Of all the places for them to visit us, they chose New Jersey.
So that's the thing I keep asking myself, like, what strategic reserve of gold or military equipment? I'm like, maybe they're just outside the city and they're circling the city because from a plane is kind of close. And I'm just like, what's of interest there that they're like, hey, we need to fly around New Jersey? It's definitely not the place I thought that, no offense if there's someone from Jersey listening, but where I thought the aliens that were coming to visit us would go first.
What I can almost guarantee you that whenever the real reason comes out, it's going to be so dumb. It's going to be so dumb that it's going to be hard to believe that it was so dumb that it was happening.
It's like some kid trolling.
Yeah, exactly. It'll be something like that, and we'll all be like, oh, really?
Yeah, it's interesting. But, well, nonetheless, we're not going to talk about UFOs all today, and we're going to talk about the markets and what's going on out there, and interest rates doing interesting things, potentially increasing inflation and what that could mean. But also, I think more importantly than any of that is a reinverting yield curve. And when a yield curve reinverts, that becomes problematic, right? Historically. Now, maybe this time's different, but maybe not. So before we get into that, let's do our opening, and we'll be right back after this. All right. Let's see here. Okay, so we're going to go from UFOs to Bank of America Global Research and what happens to the market in the second half of December historically.
Well, typically, and this is from Mike Zaccardi via Bank of America. He says, according to B of A, the second half of December has historically been the second strongest period of the year, plus 1% on average, positive 69% of the time, or almost 7 out of 10 times. So that's why we always talk about the Santa Claus rally. Although, I feel like we've been hit or miss on the Santa Claus rally since we've had this show, Daren. I know we've been skunked at least once, maybe twice in the 4 or 5 years that we've been doing this show. So, but that would line right up with the statistics of being positive, 7 out of 10 times. So anyway, we're expecting, I think the only downside to this is pretty much everybody's expecting a positive end of the year. That is absolutely the consensus at this point. So that always makes you a little nervous.
Yeah. Well, that's why we titled today Bears. And there's a stuffed bear running out of the screen, because good luck finding true bears at this point.
Absolutely. Sentiment dropped this week just a touch, down to 43 from 48 on the AAII sentiment indicator. The CNN indicator is neutral at 50, which is about where it was 1 week ago. That one is a positioning indicator. So how are people actually positioned, which is interesting. And then you've got Bitcoin at 76, extreme greed, which is up slightly from 72 last week. Been kind of hovering around that 100,000 mark. It's weird how we as humans kind of attach ourselves to round numbers when, if you think about markets, like they don't really care about that at all.
But that's not exactly true. That's sort of true. But if you think about markets as a reflection of the whole emotional conscious of the human race or whoever's trading nowadays, it's kind of AI. So I could make the argument that big fat round numbers matter less than they have historically now, because I don't think that perhaps the algorithms care more. I don't know. But big fat round numbers seem to be magnetic. Like the market likes to move there and build some support there. And that's kind of what you're seeing in the S&P, which I'll show later. 600 on the SPY or 6,000 on the S&P 500. And they hover there, and we get a lot of support and resistance around those big fat round numbers.
Absolutely. Yeah. And, when you look at sentiment, we always look at the weekly surveys, but I think it's also important to look at, what funds are being released at the time. So as an example, how the hedge, the funds that are actually hedge funds against something bad happening always take in a lot of money right after a catastrophe. I'm blanking on the name for those types of funds, Daren. Maybe you remember where market goes down, that fund has a huge return. Most of the rest of the time, it's losing money kind of steadily. It's almost like an insurance policy where it's costing you, but boom, market goes down and they kind of act inversely. You remember the name of that type of fund? I'm just blanking on it right at the moment. Anyway, those get very popular. Those get very popular. Like Nassim Taleb runs one. They get very popular right after a catastrophe. So usually if you see a lot of those being released and or touted in the media of like, hey, this fund had a huge return, you're probably at the bottom of a sentiment cycle. And I think on the reverse side of that, when you look at what's been released lately, which is leverage long ETFs, meaning that if you want to get 2 times the exposure to NVIDIA or 3 times the exposure to NVIDIA, or you're trying to buy, some fund that's going, 2 or 3 times long Bitcoin, all these types of things. And now there's also these leverage funds that are being, rolled out. That's like, hey, it's NASDAQ and Bitcoin. Like you're getting more and more risk, on top of each other. And those are coming out everywhere. You've got the meme coins, like we're not going to mention any of their names, but one in particular that we were just looking at before the show that's taken on 600 million in market cap, that's larger than 85% of publicly traded companies. That's literally named after an awful bodily function. So,
just say it, Chris. Just say
it. My Midwestern sensibilities won't allow me to, Daren. But if there's ever, if there's ever some indicators in the market of like, hey, what's being released? How do people feel about risk right now? People are very comfortable with risk. It feels like the animal spirits have been released here lately.
It's interesting. I had this like epiphany this week. I was doing some real estate analysis for a client, and we were looking at whether or not their real estate investment was actually a good investment. And we were analyzing what the actual true leverage of that real estate property was during their 4 years of owning it. And it was kind of interesting because this property is around $1 million, and they had about 4 times the leverage in it. They were basically levered up 4 times to make that investment work. And I thought a lot about that. I'm like, dude, if you lever up 4 times in the stock market, you know how much risk that is? Like, that's insanity. Like, that's like, and this particular individual put a huge chunk of their portfolio in this lever. And I was like, wow, it's just interesting how psychologically, economically, like the conscious of people is okay with like, hey, I'll just sink half my net wealth into a levered up real estate property. But I can't imagine taking, a triple QQQ levered product, which would be the triply 3 times leverage on the Qs or the NASDAQ. Like, could you ever imagine advising a client to take 3 times leverage on with half their net wealth on the NASDAQ? Like, never. You would never do that, right? Like, that would be for the riskiest of the Ponzi scheme chasing crypto bros. And like, you just wouldn't do it. But yet in real estate, like, we don't necessarily, like, it's not super smart, but people aren't freaking out about 3-4 times leverage on real estate. I just thought that was really interesting. It was kind of a realization to me that, it's funny how we treat the stock market leverage different than we treat other economic aspects.
Yeah. Good point. Continuing on with the optimism index, we got these numbers released earlier in the week, and this is from Joe Weisenthal at Bloomberg. He says a gigantic surge in small business optimism, and immediately the soft components of the survey are now matching the hard data, which you'll see on the next slide. So we were talking a lot prior to the election about how all the numbers looked great, like the economy was humming along, the market's at all-time highs, all these numbers are looking really good, and yet the sentiment from businesses especially was really low. Well, lo and behold, we are definitely a political animal now, especially in the U.S., where a lot of that is just driven by your politics, and is the person that you want to be in power or not, because now that has jumped up significantly on the soft data versus the hard data, and so we've got optimism now in line with those numbers. And so that's very interesting. And to your point about how our psychology goes into the market, it's just a reflection of the human, condition, right? And how we're looking at things. It's going to be interesting to see if that manifests itself in further gains in the market or not. Last year we had sentiment kind of in the gutter for the small businesses and everything, and the market still did really well anyway. One of the best years on record. So, who knows if that's going to be enough to keep us going and chugging in the markets in 2025. One last one here on this, there's 2 more. Another one on the sentiment side. This is financial situation 1 year ahead, much better off, also jumped significantly. This is from Lance Roberts. He says, since the election, consumers are much more optimistic about the financial situation over the next year. So, everybody's kind of piling into that end of the boat for sure. And that jump is significant all at once, obviously. Last one on the sentiment, and this is from Mike Siccardi again, and he shows via Goldman Sachs that we are maxed out across a host of sentiment indicators. So if you look at the current feeling would be the dark blue triangles or sorry, diamonds in this. Sorry, I'm recovering from being sick, so my mind's a little but anyway, it's showing, kind of the risk on versus risk off, and we're definitely tilted in terms of positioning. You look at like risky bond flows, global equity flows, US equity futures positions. They're all pretty much all the way to the right in terms of risk. Momentum is working very well right now. The VIX is low. Bull bear spread very high. So in terms of sentiment, it's hard to see how it gets much better than it is at the moment. There's very high expectations for the economy and the markets moving forward, which conflicts with the old faithful yield curve, right? And I don't know if the word is disinverting. I don't think that is a word, but that's what I'm going to say.
It can be, Chris. Just make it a word.
The yield curve has been disinverting, which means that the short-term rates are almost the same as the long-term rates, where they've been higher. The short-term rates have been higher than the long-term rates for a long time, going on, I think, about 3 years now. And so this is of note because you'll notice in prior years, right before a recession, the yield curve tends to start heading back to even, and then we get a recession. And now we are heading back to that territory. So yield curve inversions in prior history have always preceded a recession. Now there's been a lot of this time is different. We've never done X before in history over the last 5 years. So if there's ever going to be a time where things are different than normal, it's now. But I think after today, this is probably going to be above zero for the first time since it was inverted back in April of 21, I believe. And that's largely due to longer rates going higher because this is the short-term rate, the 2-year rate. And you can see that's basically been hovering in this same range for about 2 years now. It's been up and down, but basically sideways for the last couple years. So most of that disinversion is happening from the longer rates heading higher. And so who knows if that's inflation expectations, if that's growth expectations, if that's growth and inflation expectations. The rate market is trying to tell us something. And what that is will only be clear in hindsight, of course. But it's of note. And when you look at the expectations of Fed fund decreases here, again, according to Mike Zaccardi, just 2.1 cuts priced into the next 6 months. We had as many as over 6 earlier in the year in 2024 were expected. And really since then, we've gotten some really strong numbers. The market continues to be strong. Like we said, with the sentiment indicators, you've got a lot of really wonky stuff going on. So it makes it a little tough for the Fed to justify cutting rates, especially if you start to see inflation start to tick up again. I do think that Powell really is cognizant of not being taken over by inflation and not losing the battle right at the end. So I think he's going to be very careful to not let go of the reins on the rates before they're sure that inflation is crushed. And right now, the long end of the curve is kind of questioning whether or not that's coming back or not. So we talked a lot about sentiment in the U.S. I would say that's not just inside the U.S. because a lot of foreign investors are also piling money into the U.S., which you can see here. This is from Charlie Biello. He says U.S. stocks are now trading at over 22 times forward earnings versus 14 for international stocks, which is the widest valuation gap in history. So you can see in the past, they'd always kind of moved together. And then recently it's just completely different. So going back to how investing works a lot like horse betting or sports betting, it's like, it's not enough to know which is the best horse or which is the best team. You also have to take in the odds into account. Because right now the odds are saying the US companies are the best and it's priced that way, but it's also got a huge spread in order for you to make any money. The spread is very wide because everybody knows that, right? So where you make money in betting, of course, is when you find a discrepancy in the payouts versus what was baked into the cake. So say like when an unranked team beats a ranked team at their home field, when that home team had 20 plus point spread to win, right? That's where the betting pays off, not in betting on that home team to win when the spread is that large. So hopefully that makes sense in that analogy. The degenerate gamblers out there will know what I'm talking about.
Degenerate gamblers. You notice that degenerate is almost a claim to fame now amongst the degenerate investors.
Oh, unfortunately, I'm painfully aware of that. Yes. But those odds have been flipped for a while. You can see here that, this is a long-term chart from Charlie Bielo again, and just showing how out of whack that US versus international valuation has gotten to. And it's been that way for quite a while. The last time we even had anywhere near that was during the .com bubble at 3. And we've way exceeded that. Now we're at 3 standard deviations, which is considered very extreme in the financial world. So there may be some opportunities there for those that are willing to go against the crowd and also willing to be wrong for a longer period of time, because this has all been, assumed for many years now, and nothing has changed on that front yet. So
you saw the chart I sent you this week, Chris, that good old ARK surpassed your famed and loved Warren Buffett.
Yes. Over the last was since 2014. Yeah.
Which isn't a good sign, right? Like when you start seeing Warren Buffett lose that bad, you almost wonder, like, how close to the end are we of this run?
Yeah.
He isn't a dummy, right?
These are all reasons why, aliens landing are low on my list of weird.
Dude, I still like, it's just still crazy to me that we're talking about aliens landing and we have these orbs and these drones flying over New Jersey, and apparently our government has no idea what they are. Like, that's just ludicrous.
I'm telling you, it's going to be like a 9-year-old kid from his parents' basement just screwing with people, and it's going to feel like the dumbest thing ever. It's almost going to be like nobody will believe it because it'll be so dumb. They'll be like, no way.
How'd that happen? Although I don't know if have you seen any of like the Marvel movies, or like what are they called? Where it's like the end of the world and the dude snaps his fingers. I'm blanking on what the movie's called, but like you just wonder, like, oh, is that moment where the other aliens come to this world and we're all those people running around scared, and hopefully we got some mutants floating around.
Yeah. I'm at that stage with my 4-year-old where we're reading a lot of Avengers and such. So yeah, let's hope that if there are aliens, there are some Avengers as well.
There's some good aliens out there too, to protect us from our humanness.
I'll choose to believe that.
So I thought today I'd just start off by going through kind of the Forex Factory's list of economic indicators for the week. One that I think kind of spooked on the market this week was this CPI coming in. It came in at expected, but As you can tell, it's up from previous, so it was expected to be up, and it was right where they thought it would be, but yet it was higher, inflation ticking up a little bit. And then more on the leading indicator of inflation, PPI, producer prices index, popped up way above expectations. Now, this tends, as you can see, to be a very noisy indicator. So it could just be a momentary thing. But, I generally say that there's definitely a pro-business kind of feeling out there right now. And I think that's somewhat of what's riding and pushing from a tailwind standpoint, the market, and making us wonder, is inflation back? And then I think when you look at the 10-year, and you can see the last 5 days, the 10-year just went straight up, which is not good for bonds, not good for diversified investors. But what I'll tell you from a technical standpoint, there's a couple good news, bad news is about this chart. You can see we talked about this breakdown, I think, last week, and then it came back up and tried to reclaim and didn't. But the fact that now it went back down, found support in this area, it's headed back north, tells you that there's some strength behind that. What I will say, though, this trend line, I would say now is invalidated, that it's now holding that support. So I think the strength is, or the risk is to the upside at this point. But if you look at this long-term trend line, this red line here, we're still right below it. So it still has to contend again with that long-term trend line. So the long-term trend line is going to be stronger than a shorter-term trend line, which is where it was getting resistance before. You could also argue that it found resistance on that long-term trend line, which happened to coincide with this other downtrend line versus the uptrend line. So now that's below the downtrend, we'll want to watch that. We'll want to watch real closely around 4.5 range. If it breaks above that, I think we go higher. But there's going to be a ton of resistance right here, I think. So the run on that might be over, which wasn't good for bonds this week, right? What happened to bonds? Flip it around, they went down, right? So the fact that bonds are now below and close below these upward trend lines, I don't like. I think that doesn't look good technically for the bond market. I think you could still probably argue that there's a trend intact somewhere around here in range. If we took this trend line and moved it kind of up, something like that, you could maybe argue that uptrend's still good. It's just looking weaker. So we'll see next week what 10-year rates do. And that's our last full week before Christmas. Then we have Christmas, and then we have going into the end of the new year. Like Chris showed earlier, things are pretty positive going into the end of the new year, typically, historically. But I can remember a New Year's Day almost, Chris, where we were sitting together selling and tax loss harvesting portfolios because it was getting obliterated in 2018, I think that was.
Yep,
So, who knows what's going to happen. So let's talk about SPY. This is the S&P 500, the largest U.S. stocks. And you can see we're just working a nice trend line, still working up. I think that trend's still intact. I think upward momentum's intact. Kind of a little softness this week. Didn't really go anywhere, but I don't think that it's not intact at this point. We closed above our primary trading timeframes on these simple moving averages and exponential moving averages. So the traders are still in the game. I don't think there's anything to worry about at the moment in the stock market. I think indicators would lead that, hey, we're headed higher. The rest of this year, I think that the odds are that way. What happens next year when we get closer to inauguration? I don't think we can not talk about what happened in Syria this week. We try not to get political, but we try to be geopolitical in this broadcast and talk about macro environments and how that impacts markets, and the fact that basically Russia and Iran bailed out of Syria and backing this Assad regime. I think that's pretty monumental for changing Middle East politics, but also leaves Iran a lot more vulnerable to potential strikes from Israel, because now they have a clear path through Syria. They don't have to fly over Jordan, and then just a little bit over Iraq. So that whole setup now looks even more likely, I think, to potentially become a flashpoint. And I especially think, given that Trump has said to Netanyahu that do what you got to do with Iran, that is a higher risk. Although typically Trump likes to say, "Hey, that's not do the war thing," because he tends to be pro-business, and war is not good for business other than for the defense contractors. So I could see, and this has happened in the past, and I've noticed this over time, that this period of time in between when we have another president elected, we have our lame duck president right now, basically just trying to pardon anybody he can get political favor from at this point, that's happening, and all the pardoning's happening. And then you have this moment in time. I've seen Israel do some pretty intense things as far as taking out things that need to be taken out. They've bombed Palestine in the past, or Hamas, however you look at it. And it wouldn't be shocking to see them use this moment in time where there's kind of disorder among Americans and those who control the power waves of the government, that if they were to step in and take out the nuclear labs of Iran, this is that moment, right? That you see historically that happen. So I would be watching that over the next, few weeks as a potential as we go into January 20th. It'll be interesting to see how that plays out. I also think that, given that the Ukrainians would love for the Iranians to stop shipping their drones to Russia, you could also see some moves made on Iran to kind of get them out of the mix with the Russian-Ukraine conflict. So interesting next couple of weeks. I think I'm definitely on lookout for geopolitical moves and global reshuffling, which would impact the oil market. And we've been watching oil for a while. I've been talking about this declining wedge here, and it's just rolling around this support line of 68. Found support again this week, and the fact it's just sitting there bouncing could tell you a couple things. And we talked about this last week, where it's this very similar setup to this look right here, is starting to look really similar, right? So if we saw something break out in the Middle East over the next month and a half, the market's kind of whispering that something's in the mix. Because when you see this really tight volatility, you see a breakout, up or down, breakdown. And just given what we saw in Syria this week, it's not going to just be smooth sailing for the Syrian people. Unfortunately, I don't think that's the case. I could see something happening which would then spike oil up. Or if we get a depreciatory event, which wasn't the case when we saw CPI, you would see it break down. We've not seen that at the moment. So anyway, I think watch oil for the whisper about what's about to happen when it comes to the Middle East and what we'll see over there. I don't know if you heard of this, Chris, this week. I think we should talk about this because this is kind of mind-boggling in some ways, and I'm not even sure how to make sense of it all yet. But Google came out with this Willow chip. Did you read anything about that?
Yeah, pretty amazing.
And they said, like, the Willow chip is so smart that it proves there's other dimensions or something crazy.
Yes.
I'm like, all right, my mind's bent. Let me think about that for a while.
Yeah.
But like this chip that is just so powerful that it proves there's other dimensions out there. I'm not even sure what to make of that at this moment. But from a technical standpoint, you can see Google all-time high right here, and it breaks out with the announcement of that chip, comes back in and tests it, finds support at the all-time high. So if I'm a short-term trader, I'm liking that setup a lot. But that's pretty crazy, right? To think about, they have this chip now that proves there's other dimensions. I don't even know what to make of that other than, wow, okay, we'll see what's happening. But why does that matter is because Google, this is not an ad I endorse. I'm getting rid of this. It just popped up. There you go. You can see Google is, oh, you guys didn't even see that. So that's good. You know, it's really annoying about FinViz. I love this heat map. I hate how they do pop-up ads everywhere, man. Just annoys the snot out of me. And they just popped up a political ad that no one had to see, luckily. But Google, if that it's one of these big dogs. It keeps pulling up the rest of the indices, but you can see struggle bus, at least today, on the Magnificent Seven, quote unquote, and all week. Although we did, Amazon up 8% this week. That was from that chip. So interesting. This one, dude, Broadcom, did you see Pelosi on this one?
No, I missed that.
So Pelosi made like almost $2 million on a trade like a few months ago or weeks ago. She put a massive trade on Broadcom, and sure enough, it rips when earnings comes out. Like when does it just stop being obvious and just feel like fraud? I mean, it's just crazy that that's still allowed. But anyway, Broadcom smashed earnings, and magically Pelosi had herself a nice little position on it. I just don't even know what. I'll put that in the willow chip bucket. Like in the UFO bucket. Like how do you even, like, it's just so obvious at this point. But all right, so let's go and take a look at gold. Gold rates going up. That's not good for gold. But what I'll say about gold, and that I like about the structure of gold, is you have this downward trend line here, and it was finding resistance. It breaks out, finds support, and it closed right above support. I like that. That's bullish in my book. But that might also lead into this idea that rates are going to turn around again here in the next week. But that's a nice setup, right? Those are always nice setups for the traders out there that like those downtrend, find support, bounces up. That's probably one of my favorite setups if I'm in trader mode. That seems to be consistent. None of it's 100% consistent, but that looks good from a short-term perspective that we're going to get a breakout in gold. I'd still maybe want to look for some follow through. Like if I got a green candle right here, I'd probably take a bite on that. But if it goes below that, obviously it's a failed breakout. Talk Bitcoin. Bitcoin's just been, this chart looks mean, dude. All right. So mean is a term in my book that it's about ready to rip.
Yeah, it's hard to argue any weakness there.
Mean is in a positive sense. It looks good. So you can see here this building structure. So here's an example of, now compare these two areas, kind of this very similar build, and we're right at that 100, and it's building up. You can see here's another example of that build, that kind of stair stepping up, and then you just get these lowercase God candles that they're called, that Bitcoin's known for, where it just rips up. And it looks to me like we're about ready to do that same thing. Now, let me flip on the other side of that, because we could also argue that it's a topping pattern, because see, that look also somewhat looks like that look, right? So be careful, be cautious, be thoughtful, be diversified, right? Like don't get over the top of your skis on this one. I think fundamentally, I really like the setup here. Technically, it looks pretty good, but we could easily be topping out. The fact that we keep dropping below 100, reclaiming 100, dropping below 100, reclaiming 100, tells me that there's a lot of buying going on right here. And that buying will ultimately, prices set on the margin, just suck it up higher. So be watching for that. I almost would argue that we would expect to see a breakout this weekend. I'll be watching this weekend. I could very easily see something like this pop up this weekend on that chart. But in fairness, because let's just do the other side of the coin on this, because I think that's important. Here's another example of this kind of building up, although it's a little bit different than other times. This is a good example of what I was showing on the oil chart earlier with this descending wedge. That, and then you get this breakout, which sort of looks like what's going on in oil right now. That's why I was talking about this idea of, you got this descending wedge happening. and then this breakout. So it wouldn't shock me if out of nowhere Israel starts bombing Iran and their nuclear sites. That would just be, or Israel really goes after the Houthis, because they pretty much have demolished Hamas. They've demolished Hezbollah. Syria's done. Russia's out of Syria. Really all it's left is Iran and one of their proxies, and that's the Houthis. And the question is, does Israel go after the Houthis or just go straight to Iran?
Well, counter to that though, all of that has happened and oil has gone down, right? So maybe even if that happens, oil continues to, descend, right?
Yeah. I mean, because last time it really broke out, this was during the Russian invasion of Ukraine, right? And ever since then, it's just calmed down. Right. But volatility's wound up, right? So yeah, it's gone down, but maybe it goes up short term because you have that look there. I don't know. It'd be interesting to see. Certainly, at least the rhetoric coming out of the Trump administration is like, we want peace. We don't want wars. Figure your garbage out. Let's get on with building. That's the rhetoric. Who knows what's going on behind the scenes? But that's certainly the rhetoric at the moment.
Well, and even if you correctly predict what will happen, the result of that is low. Because if you list all the things that have happened, even over the last year, and you're like, hey, is the market up or down as a result of this? Even if you get part A right, getting part B right is extremely difficult.
Yeah, if not absolutely. Impossible. It all makes perfect sense in hindsight, but getting there is tough. This is interesting so this is the Dow Jones Transportation Index, which I always look at. Like, this index tracks the companies that are like the arteries of the economy, and the arteries of the economy are how the economy pumps. And the arteries look pretty healthy. Like, look at that breakout, long-term downward trend breakout. We did get it. This is like a formation, what we would call a double top. See that double top there? And we broke neckline. That would say that we're probably going to test this area pretty strong. But the fact that it is broken out above there, that's pretty good economically. And that basically broke out the day of the election. Look at that, 11/11, that time frame. But it looks like maybe that's over now, and maybe we're going to come back in. Like all politicians.
Small stocks, though, are negative since the election, right? Like if you go to IWM.
IWM's still positive because this was the election.
No, from November 6th. Go to November 6th. Am I looking at that right?
Yeah, I think they're about even from November 6th. They're actually just right on that support line from November 6th. You got a double top there too, though, which is interesting, right?
Yeah, I guess is not the huge breakout that you would expect with all the optimism jumping and kind of the rhetoric that you hear that the market's just going straight up since the election. Not really.
Yeah, I mean, I think the what I would think about here would be, all politicians. There's this moment after something happens where everyone's excited, and then like that veneer, that honeymoon period. What I would say the charts are telling us right now is that the honeymoon period's probably coming to an end, and whether it lasts another couple weeks, we do something like this or we do like this, then it's time to deliver, right? And will we have a peaceful transition of power? One, we all think we will. Who knows? Two, like once the Trump administration gets in there, like how disruptive is it? Because he's talking a lot about disruption, right? Whether you like that disruption or you don't like that disruption, he's still talking about disruption. And once he gets in there and starts disrupting, what's the impact of that disruption? Because disruption markets don't generally like disruption, right? They like to know what's coming in the future. And if you disrupt a lot of things, like that's not generally good. So my whole question is like, fine, you can threaten you're going to cut all these government employees, but what are you going to replace it with? Because if you just stop the printer press, things aren't going to go well for you. Hate to break it to you.
Well, I'm just looking at price as an indicator and using my trusty old Y charts, which is updated as of yesterday. So it's not a candle chart. It's showing IWM is negative 1.75 since the election. And then we were down another 60 bips today. So call it right around 2%. So since the election, U.S. small companies stocks are down 2%, despite all the hype.
That is, well, yes, I think that's true, Chris, because if you look at this candlestick right here, so this is the elections candlestick on 6th of November. And you can see price action during that day was still in where we're at. That's true, though, if you're talking about close.
Mm-hmm.
You see what I'm saying?
About close. Yep.
Yeah. So close was up here. And if we do an info line here, if we take off a close to here, then we're down 1.75%, but we're still in that candle. So from a technical perspective, I still say, yeah, it's in ballpark, right? The fact that it closed inside this wick here tells me there's still support in this arena. Had it closed below that wick today, I would have said, yeah, there's a lot of weakness there. But I would say the honeymoon period is getting shaky. America is finding out who they elected for good or bad at this point, right? Like people are starting to see, well, maybe it's not all roses and glory and maybe something's coming. And I think you have to accept that potentiality. And if we're going to do all the changes, we're going to change. It's not going to just change overnight and everything's going to be great. Like that's just not a reality. Like and what I'm really curious to see is if they're truly going to make all these changes across the political, government, economics world. Like if they're going to make all these changes, how are they going to lead us through those changes? Because that's difficult. That's not an easy task. And you can talk it and you can throw the rhetoric, but that comes with ups and downs. And the markets, I think, are whispering that to us at this point. When we look at the front edge of the risk curve, that's where you're seeing some more weakness, right? You can see we're about to lose that 20 simple moving average, which is a key trading average. So the traders are getting, I don't know, maybe I'm going to take out, and you're about to get a cross. So when you get these crosses of the 9 EMA over the 20, that can be an exit point for traders. So that's interesting. So front end of your risk curve, you see weakness. SOX, though, look at SOX jumping up. They're breaking out. So SOX is the semiconductor, Philadelphia semiconductor. I'll bet a lot of this is driven by the Google Willow chip, though. I'm interested to do a lot of reading over the weekend on the Willow chip to learn more about it, but pretty wild that some piece of electronics, quote unquote, is proving that there's another dimension. I don't even know what to make sense of.
I wonder if there's a dimension where valuations matter anymore.
There's a valuation. That's right. Or value stocks actually are good.
there's a fundamentals dimension.
Yeah. For real. The you can see here, this is the VIX. So what the VIX measures is complacency amongst those who trade the S&P 500 futures. So typically when they get anxious, then you see it spike up because the market's going down. And what they're telling you right now is they're excited for their Christmas vacation. They don't want to deal with this right now. They just want to hang out at home with their family and not trade the futures. That's what that's telling you right now. And that's why you get kind of this putter to the end of the year. And then we'll come back into the January and see what life has to deliver to us. I think that's it, Chris. I think I don't think there's much else to cover today. Actually, maybe the dollar. We'll just look at that real quick. Breakout on the dollar. Look at that test. Breakout, test. Dollar's going stronger, but the move might be over. There's a lot of resistance right in there. But that's a strong test of support. I mean, that's a picture perfect setup what I'm talking about, where you have the breakouts and then it comes back in, tests it, holds, goes up. That's a great setup too. Anyway, I think we'll leave it there. Have a wonderful weekend, everyone. Enjoy the still fall for another few days weather, and we'll be into winter. And if you have any questions, as always, reach out. Take care.